Raytech Holding Limited NASDAQ Ray. Due Diligence Report Executive Summary. Business. Hong Kong headquartered supplier and wholesaler of personal care electrical appliances, trimmers, grooming tools, and tooling product development for international brand owners. Operates via subsidiary Pure Beauty Manufacturing. Recent performance FY 2025. Revenue 78.7 million Hong Kong dollars, approximately equals 10.1 million United States dollars, up approximately 17.6% year over year. Net income 8.3 million Hong Kong dollars, approximately equals 1.1 million United States dollars. Cash and cash equivalents 84.9 million Hong Kong dollars, approximately equals 10.9 million United States dollars. At year end, market snapshot, small cap, micro cap stock. Market capitalization, roughly 25 United States dollars 3 OM, with approximately 43.6 meters shares outstanding. 52-week trading range, roughly 41 cents $3.68. Recent price action, very volatile. Thesis: microcap distributor, wholesaler showing recovering. Top line and modest profitability in FY 2025, with surprisingly strong cash balances. Investment case rests on continued product wins in personal care appliances, disciplined expense control, and converting tooling programs into recurring revenue. Risks include small-scale customer concentration and extreme trading volatility. 1. Company overview and business model, what they do. Source: design and wholesale personal care and lifestyle electrical appliances for international brand owners. Provide product design and tooling development services. How they earn money. Product sales largest, tooling program revenue lumpy, margin capture via sourcing manufacturing relationships. Revenue is seasonal and tied to brand owners' orders. To industry and market position: industry, personal care, electrical appliances, and small consumer electronics.
A low margin.
Volume-driven segment with many OEM/ODM suppliers in Asia. Position: small regional supplier with design and tooling capability. Competes on price, design support, and customer relationships rather than scale. 3 revenue streams: core, sales of trimmers and personal care appliances. Adjacencies, tooling, and program development. Recent trends: revenue for FY 2025 increased to 78.7 million Hong Kong dollars. 6-month period to September 30th, 2024 showed 31% year-over-year growth to 43.2 million Hong Kong dollars, driven by trimmer series sales and new customers. For competitive advantages: product tooling know-how and ability to service brand specifications. Healthy working capital management with a large cash balance relative to scale. Weaknesses: no scale advantage, highly competitive segment, and customer order concentration. 5. Scalability: organic scaling, limited unless new contracts with larger customers are secured. M&A partnerships could accelerate scale but would require financing. 6. Financial statement analysis. Income statement: FY 2025 revenue 78.7 million Hong Kong dollars, approximately equals 10.1 million United States dollars, up 17.6%. FY 2025 net income 8.3 million Hong Kong dollars, approximately equals 1.1 million United States dollars, margin approximately 10.5%. H1 FY 2025. Revenue 43.2 million Hong Kong dollars, up 31% year over year. Balance sheet: cash and equivalents 84.9 million Hong Kong dollars, approximately equals 10.9 million United States dollars. Conservative balance sheet with strong liquidity. Cash flow positive. Operating cash flow, though, lumpy. Cash balance increased significantly in FY 2025. 7 key valuation metrics: market cap, tilde, US $25 3 OM PS ratio, approximately 0.8 to 0.9x on trailing revenue. EV/EBITDA, around approximately 11x on some estimates. Interpret cautiously due to small, lumpy EBITDA. Book value, positive equity base. Book value per share, relatively low. 8 growth potential in TAM. Global grooming and small appliance markets are large, but Raytech's share is limited to OEM/ODM contracts. Upside drivers: new customer wins, recurring tooling programs, Adjacent appliance categories. Constraints. Competitive pricing, order lumpiness, customer dependence. 9. Competitor landscape competes with many Asian OEM/ODM suppliers. Larger contract manufacturers enjoy scale advantages. Raytech must differentiate via design, service, and relationships. 10. Management and governance operated from Hong Kong, with management experienced in sourcing and OEM supply. Listed on NASDAQ in May 2024. Governance practices standard for small-cap IPOs. Related party transactions and disclosures should be monitored. 11. Risk scale. Concentration risk. Reliance on a few products and customers. Seasonality, product cycles, lumpy order flow. Competitive pricing. Larger OEMs can undercut pricing. Liquidity risk. Very thinly traded stock, volatile price. Accounting disclosure risk. Small-cap cross-border listing increases, reporting risk. 12. Dividends. Shareholder returns. No regular dividend policy. Cash is being retained for operations and growth. A dividend is possible, but not signaled by management. 13. Insider and institutional activity. Shares outstanding. Approximately 43.6 M. Institutional ownership is minimal due to microcap size. Insider holdings tied to IPO. Monitor for lockup expirations. 14. Technical analysis and market behavior. 52-week range. 41 cents, $3.68. Trading low liquidity, high volatility. Use strict position sizing and limit orders if trading. 15. Recent analyst coverage and news. IPO on NASDAQ in May 2024 with $6 million offering. FY 2025 results reported. Revenue plus 17.6% year-over-year. Net income 8.3 million Hong Kong dollars. H1 FY 2025 revenue growth of 31% supported by trimmer sales. 16. Monitoring checklist. Track customer concentration greater than 10% thresholds. Watch insider lockup expirations and any secondary offerings. Monitor inventory and tooling investments. Read 2 OF and 6K filings closely for related party and revenue recognition disclosures. Track cash flow conversion versus reported earnings. 17. Investment conclusion. Fit. Speculative microcap with cash cushion and recent growth. Suitable only for high-risk allocations. Bull case. Sustained growth in trimmers and tooling, improved margins, and disciplined use of cash. Bear case. Customer loss, price competition, or dilution through capital raises could drive downside. One-page cheat sheet. Ticker exchange. Ray NASDAQ FY 2025 revenue. 78.7 million Hong Kong dollars approximately equals 10.1 million United States dollars. FY 2025 net income. 8.3 million Hong Kong dollars approximately equals 1.1 million United States dollars. Cash. 84.9 million Hong Kong dollars approximately equals 10.9 million United States dollars. Shares outstanding. Tilde 436 M market cap. Tilde is $25.30 M valuation. PS. Approximately 0.8 to 0.9. EV/EBITDA approximately 11x 52-week range. 41 cents, $3.68.